This is The Real Story with Michelle Makori.
Hello, I'm Michelle Makori, and this is The Real Story, where we go beyond the headlines, beneath the surface, and behind the curtain to show you what is really happening with money, markets, and power. And we are coming to you from the Rule Symposium, one of the premier gatherings for the mining industry, the natural resource investing industry, and of course, the precious metals community. Many of the top leaders, the biggest names, and the brightest minds are here. So it's no wonder we find Peter Grosskopf here. Peter, good to have you with us.
Thanks for having me, Michelle.
All right, Peter, you are, of course, the chairman of SCP Resource Finance, one of the leading mining-focused firms in Canada, the former CEO of Sprott, where you helped grow assets under management from roughly 5 billion to more than 20 billion. And you've spent more than 35 years in financial services, investment banking, precious metals, and natural resources. And you're now the founder of Argo Digital Gold, a platform focused on digital access to physical gold. So you're the perfect person for this conversation, which is largely around the evolution of the infrastructure around gold. So, Peter, over the past several years, we have seen gold moving steadily back into the macro conversation, as you know. We've had record central bank purchasing of gold. Gold has now overtaken US Treasuries as the top asset held by central banks. We have had gold hit new all-time highs, retreat a bit, but hit new all-time highs. That's gotten the interest of retail investors, institutional investors. Banks like Morgan Stanley came up with phrases like the debasement trade, putting gold on the front line of some of the institutional investment portfolio ideas. Debasement, de-dollarization accelerated by excessive weaponization of the dollar and the dollar-based financial architecture. All of this combining, making gold a more prominent neutral reserve asset. And then we also have the advancement of real-world asset tokenization and capital markets, bringing more of the financial system on-chain. So we've got gold becoming an increasingly bigger part of the global monetary system, gold getting renewed interest, many would argue not enough, but renewed interest as an investment on the institutional and retail side. And the question becomes, does this barbaric relic, as some have called it, need to evolve in terms of the infrastructure around gold as it's taking a more prominent role?
Well, you've summarized the goings-on in the gold market perfectly, and so I didn't interrupt you at all. And I would say the answer to your question is yes. We do need to evolve the gold market infrastructure to make it more accessible, more usable as a payments currency. And I think the key word there is make it fungible. It needs to become fungible. You know, having this massive OTC market over in London, which really is the driving force behind gold trading, and this levered paper COMEX market in North America is not the ideal combination. So I think that to create an international vaulting network that can provide the infrastructure for a fungible unit of gold to be traded amongst like-minded investors is needed.
So I think, and correct me if I'm wrong, we can maybe separate this conversation into two parts. One part is gold's role in the global monetary system as owned by sovereigns and institutions and as a neutral reserve asset, which again naturally raises questions about infrastructure and payment rails and currencies and trade. And then also as an investment asset, and how that maybe links into on-chain and real-world asset and tokenization and digitizing gold. And I don't know that necessarily it would be the same pathways for both of those angles.
Well, you've got gold outside of the banking system, and you've got gold inside of the banking system, and then you've got gold inside of the securities system. Those are different rails right now, and those rails need to talk to each other. So that's one thing. Secondly, gold is not that efficient under any of those rails for smaller retail investors. It's still clunky. Go to get physical storage, to deal with somebody who knows and can be trusted, to set up an account to access your Your storage certificate, that's a work in process for a retail investor. So it would be great if we could make it more efficient now.
So let's focus on the investment level first, right? One of the biggest themes in capital markets right now is tokenization, real world asset tokenization, in particular, getting everything from commodities to real estate to securities to bonds on chain. This is being heavily, heavily pushed by Larry Fink and BlackRock, the biggest asset manager in the world, saying that this is the next evolution in markets. JP Morgan is on board. Citi is moving aggressively into the space. I want to play you a quick soundbite that we heard from Larry Fink recently.
Okay.
We're not spending enough time talking about how quickly we're going to tokenize every financial asset and the opportunity we're going to have a digital wallet and moving ETFs and other things through a digital wallet. And I think that's going to happen worldwide very rapidly. It will be changing the technology around the plumbing of finance.
I do believe we're just at the beginning of the tokenization of all assets, from real estate to equities to bonds across the board. So we look at that as the next wave of opportunity for BlackRock over the next tens of years as we start moving away from traditional financial assets by repotting them in a digital manner and then having people stay in that digital ecosystem.
And he goes on to say that this is the next evolution in markets for everything from finance to real world assets. Is this inevitable? Is this the next generation?
For gold, yes, absolutely. Couldn't agree with him more. I mean, I'll give you an example. If you're a client over in Europe, and let's say you're a client of Barclays or Deutsche Bank, and you're holding good delivery gold in storage, you imagine how difficult it must be to take that out and transfer it to a new address in the States if you're moving. I mean, it involves 20 different steps right now. It's very difficult to do. And so there's no technological barrier to having that on a chain that could trade in less than a second to your new account. There's no technological barriers. All that technology is there.
And again, there are many pros to tokenization. One of them is reducing friction, reducing costs, making things easier to be settled, fractionalization, taking an asset and creating broader access to it by dividing it into fractions, right? Around the clock trading. A lot of pros, and we can get into some of those pros. But I can hear my viewers saying, but what about the cons? Because for the longest time, gold investors have been told gold is the only asset without counterparty risk. If you don't hold it, you don't own it. How does tokenizing of gold play into that major thesis that's been behind gold ownership for all of these years?
Let's unpack what you just said. Gold's the only asset without counterparty risk. And the second part was you can't do that with gold if somebody else is holding it for you. I don't agree with that. So what we believe in is a construct that's 100% physically backed gold, good delivery gold, where you hold a certificate. The certificate is held for you in trust in a bankruptcy remote fashion. And all you're doing is potentially taking that certificate and holding it in different places, depending on whether you're using it as a payment, whether you're using it as a financial account holding, whether you're using it, in my experiences, and moving from one place to another. So it does need to be perfectly constructed. You need to be able to trust it. And I think the last part and the very important part is you need to be able to redeem it. So the ultimate trust in the gold market is I need a vault that I can roll my truck or car to and pick up or have it mailed to me, that physical gold. And that's the ultimate trust in the end. Nobody's going to, I think, from the gold market, trust somebody or some instrument unless they can pick it up.
Does that certificate, tokenized or not, make investors feel secure enough that they can actually pick up that gold?
I think emphatically, yes, you can get there. That technology exists now. It's not yet in liquid form. It's not yet offered by enough dealers. So I'm not saying it's ready to go, But for instance, the World Gold Council and their gold as a service platform, they know how to do it. They have the custodians, they have the vaults, they can offer it on a super low cost basis. And that certificate, as I understand it, is completely bankruptcy remote held for you by a custodian. It's not available yet, though. We haven't started trading it.
And not yet, and there are advancements coming into that space. But, you know, people would still say you need to own the physical gold. To that, people would say, well, what is a gold ETF? Because ultimately that also removes some level of trust and sovereignty and ownership. And you, of course, have been a leader in gold-backed ETFs and silver-backed ETFs as well. And that was a distinction between the Sprott ETFs versus other ETFs.
That was the #1 selling feature, is that we were 100% physically backed.
But correct me if I'm wrong here, the issue even with those ETFs was that you could not redeem the gold unless you met a certain minimum threshold, unless you owned enough units, I believe, and correct me if I'm wrong, you needed to have a 400-ounce London gold delivery bar worth of gold in order to redeem anything from the physical ETFs. And the other ETFs, you need to be an authorized participant, the non-physical trust ETFs. So a company like Argo or Tokenized Gold, how do you see that addressing those challenges?
So I don't think you can tell an investor who holds a physical certificate that they can pick up gold, and I don't think you'll be able to pick up gold to a fractional amount that's below a certain level. I think the very smallest investors will have to rely on the fact that larger investors can buy their certificates, accumulate them to the point that a minimum redemption can occur. But I do think they need to know that the redemption process works. The additional level of complexity between you and your gold and an ETF is, of course, your ETF is held by usually a financial institution. Those financial institutions can get in trouble. They can lever their balance sheets. They can freeze accounts. Of course, you're protected by certain governments at certain levels. But, you know, generally, I think it's a valid point for gold investors to say, why would I hedge myself against the financial system by having a contract with the financial system? That's a valid point.
And that has been one of the big selling points of gold, is that it is insurance also against the financial system.
Yes.
So does this defeat that whole argument? How do you reconcile those ideas?
It furthers it, because a digital certificate that is held directly on your behalf by a vault is a direct ownership of that gold. It's literally, and I think in the US form, it's called a warehouse receipt. So that is gold that's being held for you at a vault.
But you would then separate the idea of the vault being part of the financial system, even if that certificate is traded via the new evolution of the financial system on blockchain.
Yeah, that's right. I would separate it, and I would say that Argo's mission, and I think the mission of most gold dealers will be, they can understand the rails and the trust factor of those various vaults. They'll be able to tell you which of those certificates or tokens is 100% physically backed, redeemable at the right vaults in the right locations. So there's a bit of work involved with it. It's not all a free lunch.
Redeemable is the big selling point here and the big issue here. Currently, and I'll get more into Tether, but currently Tether is the world's biggest tokenized gold issuer, shall we say. Can you redeem Tether gold?
Yes, you can. I'm not sure of the exact mechanic through which you can redeem it, but I would say that tokens, and now we're going one step past digital certificates. Tokens don't just need the safety of being redeemable. I think tokens also need a use case, and nobody's going to buy and trade a token unless it's super convenient in some way. And these are the challenges that Tether and the other credible token, I think, is PAX-G. These are the challenges that Tether and PAX-G are having currently. There's not a lot of use cases except for storage. And if you're really trusting somebody to store your gold, are you going to trust Tether to store it for you in Switzerland? And yes to some people, especially crypto people that are comfortable with Tether, but no to a lot of others.
Because it's far, because it's in Switzerland, because it feels too remote. Like if I needed to, I couldn't
Because
go
it's
and get that.
offshore, it's Tether, and it's because it's in Switzerland, and it's because there's no vaulting network. And if you want to move from New York to Singapore, is that going to do it for you?
With regards to the tokenization, and there are issues here with blockchain and interoperability, and whether it's a permissioned or permissionless distributed ledger. If we zoom out and look at the big thesis of RWA tokenization, real world asset tokenization, which I believe the idea is for it to be a common blockchain, or at least a few common blockchains where you can
That's right.
trade different assets. That brings up a couple of questions, but the first one, given you were a pioneer in physically gold-backed ETFs, what does this mean for the ETF model?
I don't think it's going to affect the ETF model. To be clear, I believe that gold, and to your macro comment, I think gold is being used by so many more investors now for so many more reasons as a reserve asset, that there's still, generally speaking, a large incoming tide of investors that are starting to buy gold. So I think ETFs are actually going to keep growing.
Okay.
Not just
even if you have the option to have redeemable tokenized
absolutely,
gold?
because ETFs fulfill a function within the securities world. Many assets, many funds can't own gold unless it's securitized, unless it's a security held in a mutual fund or what have you. Now, these rules are changing, and but I think that ETFs have a very valid position in that
So
world.
you could actually have securitized tokenized ETFs of gold-backed ETFs. Like
Yeah.
you could have the token of the ETF, like
you could have it going.
trading on the blockchain.
And in fact, you could have a very legitimate gold ETF buying gold stable coins to use as their backing.
And we will get into stable coins in a minute, because that is obviously a huge conversation. But a lot of our viewers hear this tokenization, and the fact that BlackRock is leading this makes people a little concerned, raise eyebrows. And again, I'm not specifically talking about this. I'm talking about the trend of real-world asset tokenization. And it says it defeats the idea of sovereignty. If you take a conspiracy theory angle here, right? Indulge me for a minute, Peter. Larry Fink is the co-interim chair of the World Economic Forum. World Economic Forum famously said, "You shall own nothing and be happy," right? It's now pushing this whole idea of ownership represented digitally. And many say that dilutes the whole idea of sovereignty. It creates concerns about power, about centralization, about control, about being in a digital matrix, being on the grid. And to many gold investors, that's where physical gold, is the solution, or at least a defense against all of that. I mean, you could say it's inevitable. You can say whether we like it or not, tokenization is happening. How do you view that?
I get the concern. I do. I mean, let's face it, the largest customer of BlackRock are governments. So they're part of the system in the largest possible way. But I think that there's a difference between being concerned about that power and kind of Orwellian 1984, they know where, look, they're going to trace everything anyway. They're going to trace everything anyway. And they're going to trace Bitcoin. They're happy. Trump administration is happy to allow digital assets to proliferate because they can tax them and trace them. That's why they have that technology now. So I think that it has to be permissioned in the gold world. And the reason it has to be permissioned is gold is a lightly regulated asset. They need to know who you are, and they need to know that you're not a terrorist. That's the bottom line. You're not going to get out of that. So they already know who's bought that gold. Now, if you hold that digital certificate and it's cloaked in a token, all right, I'm not sure if it's any more or less traceable if you're giving it to your kids or, your neighbors. I know that those rails at least need to be lightly regulated. And I do know that, they're going to want to tax you on gold gains. I don't think any of that's going to change. So I actually don't think it changes anything.
Okay. What does tokenized gold, though, change? What does it solve?
Well, it does solve for trading spreads. It does solve for 24/7 trading. It does solve for immediate settlement. And I think very importantly for the average investor, it will significantly bring down their cost of ownership.
Well, that brings us to another topic. Does tokenized gold spur the next gold bull market? Do you see that? I mean, our viewers do not like the idea mostly of tokenized gold, but is this what really gets gold to 10,000 to 20,000? Does this broaden access to
It
the gold
broadens
market?
access, and I think it's part of the incoming tide. Tether's been one of the biggest gold buyers in the world in the last year. I think it's helped the gold market. And I do think that having access at the household level for small investors will help the gold market. Will it drive the tide or the pace of deployment? I think it'll just add to it.
Okay, well, maybe it will drive it in. But before, again, I want to unpack that. Is there room, though, to still own gold? You said via ETFs, yes, and you've made the case for that. What about just owning physical gold? How do you see all of these various ways to own gold sort of interconnecting with each other?
Well, I think that you could easily take the case, I feel more comfortable if I have it at home, but you better have insurance. You better make sure your house is secure. You could easily take the case, I'd like to have it in a bank deposit box. If you have a good relationship with a bank, that'll cost you probably 100 basis points a year or more. And you could easily take the case that, I'm just going to be efficient and modern about this, and I want it on my phone, and I want to be able to move it and trade it on my phone. And I trust that let's say a certificate held at Brinks is going to be okay for that.
Why not diversify the way you own your gold?
Right.
I mean, that would make sense. And that's how I own my gold.
Sure.
I have some physical gold where I'm not telling people where I keep it. Even though viewers have asked, obviously you can have your physically backed ETFs, you can have your tokenized gold, you can have gold mining stocks and gold equities. I mean, to me, it makes sense that if you're going to diversify your portfolio, maybe diversify the way you own your physical metals.
Absolutely. And I would say that, for me, I've been trading gold for almost 40 years now. I'm starting to think of my household cash balances, investment balances.
Wait, what do you mean you've been
gold.
trading gold for almost 4 years?
40 years.
Oh, 40 years.
Yeah,
I was like,
40
what?
years. Yeah, too
I
long.
was like, what are you talking
Too
about?
long. Yeah.
I was like,
So
40 years. That makes a lot more sense now.
I'm starting to think, though, of gold as being the base unit of value of my household accounts. I'm not thinking of them in US. I'm certainly not thinking of them in Canadian dollars.
So what are the biggest risks then? Is it compliance? Is it custody? Is it redemption? What are the biggest risks when it comes to tokenizing gold?
Well, I think the biggest risk
Government
is
control?
I think a biggest risk is that it's not been done properly, first of all. And then I think the second biggest risk is if you're dealing with a true token that has no permission and no ledger that can be traced, can somebody hack your wallet? I don't know about that risk. I'm not a crypto person myself, but I would not want to take that risk.
So let's broaden this out into the global monetary system. Right,
Sure.
because we're talking about this on an investment level, and we're seeing gold, as I mentioned earlier, becoming a bigger part of investment portfolios. Again, many would say not enough. Tether. So we mentioned that Tether is the top issuer of gold tokens, right? It's number one, Pax is number two. Tether also happens to be the biggest issuer of stablecoins. Stablecoins, a reminder to our viewers, is what is needed to interact in the crypto ecosystem. It's usually something like $1 where it maintains its set value. The Genius Act, passed by the Trump administration, regulated stablecoin issuance, and they're backed by short-term treasuries. We started off this conversation saying how central banks have been buying gold instead of US treasuries, and the stablecoin market is expected to create more demand for US treasuries. It's expected to extend the lifeline of the US dollar and US treasuries. And then at the same time, the world's biggest issuer of stablecoins, separate from its gold-backed tokens, has become the world's biggest buyer of gold, with the exception of central banks. Connect those dots for us, Pete. I mean, what does that tell us? We have a dollar that is under attack, we can say, in the global monetary system being bifurcated we've got the biggest issue of stablecoins backed by US treasuries taking that money and buying gold.
Mm-hmm.
How do you connect those dots and potentially the future of a global monetary system here?
No, yeah, I'm not sure what money Tether is taking when it's buying gold. It's not all the stablecoin, of course. Most of it is for its own account. And I'm not sure if they're using their reserves to buy gold. It could just be corporate profits and its corporate balance sheet to buy that gold. But it does tell you one thing, that the world's largest issuer of stablecoins feels that they need to be diversified from US dollar exposure by a large gold holding. So that's what it tells us for sure.
Well, I can tell you that according to the latest data, the gold backing of the tokenized gold product is about 22 metric tons. That's the physical gold specifically allocated for
The tokens.
the tokens. Total physical gold owned by Tether, if this data is updated, is 154 metric tons, right? And that is Tether's own balance sheet reserves that support the broader business, primarily USDT.
Yeah,
the stable coin.
but I'm not sure if it's, the reserves for the stable coin or if it's Tether's own net worth, because Tether makes a lot of money and has a lot of money and has a large balance sheet. So I don't know, like I'm not an expert on Tether.
But if we do look at gold re-entering the global monetary system as that neutral reserve asset, if this de-dollarization trend that we talk about continues, and you look at the digital yuan, and which has been backed by physical gold and gold vaults around the world. And we had these conversations about a potential common currency by the BRICS, backed by, I believe, 40% gold and the rest a basket of their own currencies. That they launched a pilot that still hasn't fully taken off. But you are seeing gold, again, not only on the investment side, really re-enter the global monetary system. And then again, one has to go, surely that needs to be digitally represented somehow, because
You would think so.
these countries are not going to be moving bars of gold. What is the solution for that? If gold does become a real part of the global monetary system, or more of a part, as we maybe see more bifurcation and a lesser role for US treasuries, how does the infrastructure around gold need to change that, do you think?
Yeah. So gold is re-entering the monetary system, and Grant Williams put on a brilliant speech here where he basically talked about, we lost it in 1971 and it's coming back now, and it's not going to stop coming back. People are doing this to diversify their risk and their political risk. And that's just going to continue. Banks themselves, central banks, are large enough that they actually can and do move their gold around. Germany's been repatriating, France has been repatriating. So they are able to do that efficiently because they can move 747s of gold and they can insure them. Individuals, on the other hand, and even institutions and family offices do not have the ability to move gold efficiently. And this is where tokens or digital certificates come in.
But where do you see it beyond that in a broader context? Again, if we're talking about de-dollarization, not something I'm pushing for, but if that is what is happening and the dollar begins to lose prominence as a global reserve currency, and we have people using the digital yuan, but they don't trust the yuan, and so they say, okay, but the yuan is potentially, backed by gold. If we're starting to see on a sovereign global trade level,
You are.
how is gold digitally represented? And of course, we've also got the conversation of central bank digital currencies, and they operating on the blockchain. And the thinking is that you will have central bank digital currencies on some level backed by gold. That's a thesis that many people put out there. How does that fit in with this blockchain technology?
Well, I just think if you can serialize and code and put on a blockchain and a ledger a bar of gold, it'll be easier to do all of that. And I do think that it's happening, that central banks and other global actors are starting to create baskets essentially of reserve assets, and that includes gold and not just treasuries and not just dollars. So it's happening. I just think the other part about creating a digital asset out of gold is it'll become collateral. And think about the aspects of being able to post your gold easily if you want a loan or a mortgage or or what have you. If the digital certificate is held in trust for you by a lender, it's going to make collateralized loans with gold, unbelievably more efficient than they are now. So there's a lot of things that can happen with it.
Again, it does go back to a trust layer, right? Because the further you're away from the asset, the more layers of trust and technology are between you and that asset.
Well, I think that if you hold a digital certificate and the gold is on your name on the bar, so to speak, and it's segregated, obviously can't be talking about pooled gold here, but if it's segregated, I don't think you're very far from your asset. I think you just are paying somebody to store it for you, which is the legal definition of, gold in storage in a vault.
And you just have to, are there ways to verify that? Are there audits? What would make?
I think it will have to be audited. Absolutely.
So, I mean, it seems to me like on the global level, it's happening with the de-dollarization trend. And on the individual level, it's happening with the tokenization investment trend. But it happens via various different products.
It does.
Similar approaches, but different products.
Yep.
So the infrastructure has to change if gold does become a more central role.
It does.
What does that look like then in 5 years' time, 10 years' time? Give me a timeline that you're comfortable with.
Yeah, so the World Gold Council and its great work on the digitization of gold has put out a legal opinion issued by link letters in terms of how they believe that governments and regulators should handle the concept of digital certificates of gold. So that's got to be accepted by various regulators. Right now, they have slightly different views in Canada, the US, the UK, and how it can be held and what kind of a custody pool can it be held. So that legal and regulatory stuff needs to get worked out for sure. Then the vaults need to talk to each other. So if you want, and the banks already do this in their trading network, but they do it almost manually. But if you want to move your gold from the Royal Mint in London to the Royal Canadian Mint in Canada, there's going to have to be some kind of a co-location trade that goes on within the infrastructure to store the gold. And so those things have not been set up yet, as far as I know.
And what kind of timeline do you anticipate?
I think it'll take another year. There's a pilot that's starting with this gold as a service platform in London now. And the banks are intimately involved with that. And I think you'll start to see trading occur.
Does that allow for more manipulation of gold? Or does the fact that it's tokenized alleviate some of the concerns that we've always had with paper gold and futures markets?
I think it alleviates. It won't stop COMEX and leverage contracts for paper gold, but what it will do is it will underscore the trend to move everything to physically backed gold trading. So right now, the London market, as you know, can be traded on an unallocated basis amongst banks. And that, to me, is not what gold's purpose should be.
Oh, our viewers know that all too well. And they're always griping about that, how you have suppression of silver and of gold. But we are starting to see a shift with the development of markets in the East, competing with the COMEX and the LBMA, where physical delivery is prioritized.
And I think that's what a digital certificate and digital token market should be as well.
So it all comes back down to actual redeemability and having physical delivery, whether you want it or choose to not take it immediately.
It has to be available.
That is the crux of the matter here. All right, I know we're running out of time, but my viewers would not be happy if I did not put you in the hot seat and then force you to give me some gold price forecast, seeing as you have been trading gold not for 4 years, as I was heard, but for 40 years.
Yeah.
So
I'm pretty terrible at trading it, and I take a very long-term view, but I'm happy to share it if you want.
Please do.
Well, we've had a correction from 5,500 to about 4,000. I think it's been very healthy. I would note that I study somewhat religiously the sentiment indicators on gold to look for short-term turns, and the Bernstein DSI sentiment indicator indicated that gold was as oversold as it has ever been in the last 20 or 30 years that I've seen it about 3 weeks ago. So
Okay.
I was buying. And I think I'm constructive now, and looking forward, I would think with more inflation, with more reserve accumulation by foreign banks, with potentially some market corrections happening in markets that look a little overextended now, I would think you're going to see $6,000 gold within the next 2 years.
2 years.
Mhm.
That's going to be very disappointing for many investors who have been thinking we could get there by the end of 2026.
But this
We had Nami Prince on earlier saying she sees $6,000 gold by the end of 2026.
Like I said, I've been terrible at calling the when. I've been pretty good at calling the what. So I'm conservative. I think gold is money, is the only form of real money. And, if money can go from 4,100 now to 6 inside of 2 years, you've protected inflation very well.
And of course, gold priced in dollars is what we're talking about. And many would say we're actually seeing the decline of the dollar and dollar purchasing power decline. Hence, we're seeing, gold
Do you think
prices
your
rising.
dollar is declining? Look at our Canadian dollar. Look at other currencies across the world. Look at the yen. I mean, we've been devastated internationally by not holding gold. Devastated.
Yeah, because Canada's central bank made that fantastically brilliant decision to sell all of its gold. I believe it was, 5 years ago? When was that?
Oh, it was longer than
Longer
that.
than
I
that?
think it was in around 2000 or so, right at the lows.
Yeah, smart move.
Yeah.
I won't be too critical of the Canadian politics and administration, but leaves a lot to be desired over there. Peter, I know we need to let you go. I know you've got a flight to catch. You do have to promise to come back and give us more of your
Sure.
macro outlook on the global economy.
I'm gonna add one forecast.
Please.
Silver though, I see things in place for silver to get to well over 125, 150. I just think silver's in very short supply right now.
Well, now I have to ask you by when?
I think it's going to happen more quickly. I just think you're going to get into this technical trading shortage type of environment on silver, and I think that could happen within a year.
Within a year, we're back to triple digits.
Yeah, triple digits. Yeah.
And that's driven from the fundamental demand? Because we've had a lot of...
Both investment and fundamental. Investment demand's always been a lot higher than it's been tracked, and fundamental demand is increased by all the different uses the industrial uses.
So why do you think, what is the trigger here then? Is it this development of data centers, electrification, AI on the fundamental side, or you said the trading side?
And the new batteries coming from Samsung. It's going to start to take about 5 to 10% of the silver market in fairly short order.
So you see the fundamentals driving silver back up to 150.
It's just a constant. It's like toothpaste being squeezed through a tube. I just think the demand's going to come from everywhere.
And the Silver Institute says that we're at a 6-year deficit, I believe, when it comes to silver. And yet silver investors watching this show will say, yeah, I know, but you've told us this. Mm-hmm. And then it hit the triple digits and then it fell back down again. In fact, Wall Street Journal did an interesting piece saying that silver has actually been a more volatile play this year than Bitcoin.
That's probably true. Bitcoin's been absolutely dead.
Well, it hasn't been dead. It's been up and down, but that silver has become more volatile.
Yeah.
So,
but that you would expect that with silver. It's a fairly small market. It trades a lot, but it's a small physical market.
Now, of course, we've been talking about tokenized gold. Are we seeing the same idea then to tokenize silver?
Absolutely.
As well.
In fact, I think it will absolutely 100% have a more dramatic effect on silver than it will on gold.
But when it comes to redeeming and storing physical silver, that becomes more challenging.
We're going to have to create the network. It's going to be a little harder work, but it's going to go faster than gold because gold's put in 7-8 years of developing this concept.
So expand on that thought when you say it's going to go faster than gold.
We'll piggyback off all the legal concepts, the regulatory concepts of gold, the vaulting network concept, and even the tokenization concepts. So all of that will happen much quicker for silver.
And that would create better price discovery for silver?
Absolutely, because silver is really inefficient even compared to gold.
Okay, so triple-digit silver by 2027. Okay, back at 150.
Yeah.
And we've got gold at 6,000 in the next 2 years. In the future, whether we like it or not, is some form of digital representation on gold, both for the rise of gold within the global monetary system and as an investment vehicle.
That's right.
All right.
Good summary.
Okay.
Thank
Well,
you.
I know I have to let you go, Peter. Would love to catch up with you again. Thank you so much for joining us.
Okay, thanks for having me.
Thank you.
This is The Real Story with Michelle Makori.